QQQ day trade plan, July 24th. So when I made the plan, the QQQ was trading at 692, had closed at 691.96. It was pretty flat in the pre-market, and the VIX was at 19. So resistance level 694.37. You can see here, pretty clear resistance. Equal highs here. We were trading below the PM New York PM session here in Asia. Right off the bat, there was resistance again in London. So that's my significant high here. We'll just take our fib here, 694, and the support of 688.65. You can see here is pretty easy to see. I've got Asian low, there's London low, there's New York PM low. These plans are pretty simple when you have all those equal lows there. Sometimes it's as simple as taking the pre-market high and low. Sometimes it's not, but in this case, this was pretty straightforward. We had a nice range. We were pretty much trading inside of the New York session range. I like when there's consolidation like that overnight. If there's not a big move, because it means that it's an accumulation and likely we'll get some type of distribution into the bell. So support 688.65, and we'll just go right about there. That's fine. Okay. So these are the fibs from that range. And then the low here, again, we're just looking for the downside, but more than likely, I'm looking for previous session lows for my first targets from the open. If we break down support here. All right. So on the 15-minute chart, again, a little bit less noise, not so easy, straightforward as far as entries getting in and out. So off the open, while I make my plans on the 15-minute, I'm generally looking at a 1, 3, or 5-minute time frame to get in and out of trades here. So here, let me get this out of here because this upside was pretty irrelevant. 691. Let me get this here. Hold on. Let me redo this here. If I can get everything on the screen here. All right. All right. The other thing that's relevant, obviously, is knowing where we're at on the, that all starts from top down. So knowing when you're at on the monthly, the weekly, the daily, the hourly is helpful. And then I'm just looking at the 15-minute chart here. And here's the New York Open. And you can see here that we did have negative momentum heading right into the bell here. So the way that I'm interpreting this for the plan here, let me grab my little pointer here. All right, so long above 694.37, right, to previous day high, we'll call it 697.85, or long at 691.52 and hold up to resistance. Right off the rip here, you can see this is the 21 moving average if you'd like to use that as confluence as well on a 5-minute. So right off the rip here, we break down our pivot level here. And also the other thing, I'm also monitoring the VIX. Is the VIX rising, off the open? Okay. Are we breaking down below our pivot and support? Okay. Then I'm thinking I'm going to short the open. So, short below 688, 65. You don't have to obviously short the open, even if you're waiting for a breakdown of support. You're shorting below 68.85 and you're taking profit target at 685. So these are nice trades. These break down trades because when the VIX is ripping, if you're trading options, the premium gets juiced and they happen pretty quickly. So, but I always like to emphasize, make sure you're taking profit. This trade essentially, if you got in at the pivot and you used, um, let's just say, let's say you were bearish and you get in at the pivot, you can definitely use the resistance as um, as your stop if you'd like, or if you want to tighten it up, you can definitely tighten it up. If you're getting in at the pivot and you're just looking for support, it's going to be a tighter stop. But if you're targeting 685 and you're getting in at the pivot, there's nothing wrong with having a stop at 694 here, because that, and if you're trading ES, it's even a little bit simpler here, because you don't have to worry about theta. And then this thing obviously breaks down support, goes right to targets, and then some. And then again, you know, you can certainly trade counter trend, recovery of the 1618 level, back to support, recovery of support, back to the pivot, and then so on and so forth. You can trade it back down to support, back down to the 1618 level. So these levels, pretty much, they're pretty straightforward, and they definitely, what from what I've noticed from now, years of back testing this stuff, they're significant and they do hold weight through the rest of the session. My methodology, my ideology is to try to give you the best, simplest line, whether it be a pivot or support or resistance, to trade off of, and use that as your reference point. So if you can get to a spot where you're trading off of one line, it makes it reduces cognitive load, and there's less that you have to try to figure out. So, hey, I go long at this level or I go short at this level and I take it to this level. I need to risk one to make two. If that's not there, then I don't take it. So, and obviously time of day matters too, right? I like to focus on the open. Ideally, if you can find a good setup between 10 and 12 o'clock, that's great. Lunchtime's a little bit more difficult sometimes, a little bit choppier, and the afternoon has some nice opportunities too. But if I had to pick one specific time to trade off of, it would certainly be the open. Between 9:30 and 12 o'clock each day is when I would focus on getting the best setups. I think it's the most straightforward, and I'm definitely the sharpest during that period of time. Um, I think because, you know, I'm usually pretty fresh and ready, and if I've done a lot of thinking and trying to decipher setups and trying to get in and out of positions in the morning, I think I've used up some of my mental capital by the time the afternoon comes around, and I'm not as sharp. So I think that's part of it. But that's just me. So hopefully this review was helpful.